market hasn't been doing so well recently. It went up significantly. I think it was on Tuesday and Wednesday. There was a significant gain. However, guys, today it tumbled a little bit towards the end of the market because there were some things happening in Afghanistan. So essentially, guys, the market is fluctuating, okay? The market fluctuates all the time. It is up to you to be disciplined enough to say, you know what, I am going to stay in regardless of what's going on. Remember, for me, I'm a long-term investor, so I stay invested for the long haul. When I invest in these stocks, I invest for the long term. Anywhere from 3 to 5 years, I'm invested in the market. So if I'm not willing to go ahead and invest in a stock for that long, essentially, guys, I don't need to be investing in that stock. I'm not a short-term trader. I don't trade. I invest. And basically, an investor is someone who holds on to their positions for a long term. And so when I look at a stock that's not doing so well, I ask myself the question again and again, okay? When I invest, how long do I invest in these stocks for? Because I know how long I like to invest in these stocks, I hold on to them, okay? And so if you're buying quality stocks in the stock market, guys, you can literally hold on to your stocks for the long term. And let me tell you something, it will pay off. It pays off if you hold on to these great companies. If you have horrible companies, now that's something completely different. But if you have great companies with a great story, with a great team of management, okay, you're going to be just fine. Your accounts are going to be just fine. You just have to hang on as the market goes up and down, as it fluctuates. It fluctuates, guys. You cannot expect the market to be consistently going up all the time. That doesn't happen, guys. It doesn't happen like that. The market will go up, it will go down. You just have to be patient with it. So buy yourself some great stocks, and if you're buying great stocks, you hold on to them for the long term, you will be paid off big time. Let me give you some examples of stocks that I've owned for a very, very long time. And guys, they're actually paying off. One of the examples is Apple. I've owned Apple for quite some time now. And Apple, every once in a while it splits. So every time it splits, I get more shares of Apple. And the only way I'm benefiting from that is by holding on to that stock. Because I'm holding on to Apple, even if I didn't know that the split was going to happen, because it's my account, I benefit from that split, guys. And let me tell you, Apple is one of the best companies around. I tell new parents this all the time. I tell parents with little kids this all the time. If you have little ones, okay, and you start a brokerage account for them, personally, I think one of the first stocks you should put in there is Apple. Put Apple in there, guys. Buy Apple for your kids. I don't care how old your kid is. Buy Apple for your children. I am telling you guys, Apple is one of those companies that's not going anywhere. Apple will always be around. It's not going to drop off the face of the earth. You know why? Because nobody can live without their iPhones. By the way, I don't have an iPhone. I have an Android device, and I love my Android device. But guys, I know how people are in love with their Apple devices. I don't think Apple is going to stop making iPhones anytime soon. So what do? You invest in that company so you can get some of the benefits from this company in terms of people holding on to their iPhones, okay? So Apple is one of those companies. Yes, I'm not worried about Apple. Apple's going up and down. It's fluctuating. Am I worried? No, I'm not worried. Because number one, I know Apple is an awesome company. It's the world's largest company by market cap. It's not going anywhere. Guys, this is a company that's worth over $2 trillion. You think that company's going anywhere anytime soon? I don't think so, okay? So Apple is one of the companies I hold in my stock portfolios, multiple stock portfolios. I have Apple everywhere. You guys know I have multiple accounts because I like to go ahead and do some research, because when I come to you and present this information to you, I like to come from a place of knowledge, of know-how. So I make sure before I come on this app or any other place and talk about a platform, whether it be Fidelity, TD, E-Trade, whatever the platform is, guys, I want to have some background knowledge. So that's why I have multiple accounts everywhere, because I'm experimenting so that when I present the information to you, I am coming from a place of knowledge, hands-on experience. And I like doing that, guys. So Apple is one of the top companies in many of my accounts, because the company, guys, is always going to be around. It's not going anywhere. Those are the kind of companies you invest in. Those companies you believe will always be around. Those companies with great management. Those companies where you can literally, let me borrow this phrase right here, you can set it and forget it. Ooh, let me say that again. You buy companies where you can buy it and forget it, and it does all the work for you. You collect your coins, you collect your little dividends, because you know Apple pays a dividend, okay? Yes, Apple is a dividend payer. It's not that much money, guys, but it does pay a dividend. The last time I checked, the dividend on Apple was like 80 cents per share. That is nothing in comparison to some of these other companies. So essentially, guys, I am getting myself a great company, and on top of that, it pays me a little dividend. So guys, best thing to do when the market is not doing so well, you leave your companies alone, especially if you have great companies. Now, if you don't have great companies, that's something else. If you are staying up at night thinking about the companies, whether or not your company is going to lose all your money, then you invested in the wrong companies. You buy quality companies that's going to be around for a long time, guys. Like, here's another one, NVIDIA. NVIDIA is one of the biggest video game makers out there, one of the biggest chip makers out there. It's not going anywhere. Where's NVIDIA going, guys? Listen, NVIDIA just went through a split 4 ways, so one share became 4. You think NVIDIA is going somewhere? NVIDIA is not going anywhere. By the way, the ticker symbol for NVIDIA is NVDA, okay? I'm not giving you financial advice, but guys, companies like that, I buy them, I set it, and I forget it. Why? Because I know they're always going to be around. They're not going anywhere. So you buy great companies like the Apple, the Target, the NVIDIAs. Those are great companies to own in your stock portfolios, and basically you leave it alone and forget about it. Now, if you cannot make up your mind as to which great companies to own, so that when there's market turmoil like this, you don't have to worry about your stocks performing, one of the best things you can do for yourself is invest in the S&P 500. Again, you set it and you forget it, guys. Seriously. Find great companies, you buy the shares and you forget them and just let them ride the market, and you don't ever have to worry. So the S&P 500 SPY is another stock that you can buy. By the way, it's an ETF. You can purchase it, set it, forget it. You never have to worry about it, guys. So essentially, okay, while this market is doing what it's doing, it's going up, it's going down, buy yourself some great companies. Just hold on to them. That's it. I'm not going to trade. I don't swing trade. Okay? I don't put in options. There are people who are really good at it. Don't get me wrong. I'm just not that type of person because, number one, I don't have the time. Number two, I just don't have the patience. Okay? I don't have the discipline to go trading in and out, or perhaps write an option call. So guys, listen, I'd rather buy my stocks, hold on to them for the long term, and let them ride the market. So that's what I do. And so while this market is not doing so well right now, am I worried? No, I'm not worried. Why? Because my stocks are performing. I bought great companies, and now they're just sitting there doing their thing. They're performing. Okay? Buy great companies, and you'll be just fine with the stock market. Now, the other thing is, you need to hold on to your stocks for the long term. Stop selling your stocks just because it's not doing well one day. doesn't mean that that's what's going to happen for the long term, guys. Stop selling your stocks. Oh my God. Actually, when the market is down like that, that is when I go in there. If I have some money sitting on the side, and sometimes even when I don't have the money, I find the money and I buy more shares, guys. Yes, I buy more shares of these great companies. Here's an example. NVIDIA. I was just talking about NVIDIA the other day, and I'm looking at NVIDIA. NVIDIA was like $200 a share, and I'm like, I even said it to my students. I said, you know what? I need to go buy some more shares on NVIDIA. And this was on Monday morning. Guess what? By Tuesday afternoon, NVIDIA was at $220. Shazam. So I'm like, do I really want to go ahead and buy it when it's hitting an all-time high? No. Let me hold on to my money and wait for it to have a pullback. And when it pulls back, I'm going to go ahead and put some more money in there. So I try to be very strategic with the market. But sometimes, guys, when you find a good one, you just find the money and buy it and don't worry about it. Seriously, I found some really good ones, guys. I remember when Roku first came out, and I got the phone call from somebody. Oh, Roku is public now. So what did I do? I found the money and I bought Roku. I kid you not, people. I was buying Roku at $20 a share. Roku is one of those stocks that went all the way up to $450, $475. I think today it's at like $350 a share. But guys, imagine that. And I've held Roku now, I think, since October of 2018. So Roku has been making me some really good money. But why? Because I'm holding on to it. I could have sold Roku at $100, at $200. Even, I remember at $475, I really wanted to sell a share, guys. Because at $475, I would have recouped a lot of the money that I put into Roku, but I didn't sell it. Because I believe there's a great company there. There's a great future for this company. So I'm just going to hold on to my shares. I don't know what's going to happen tomorrow, but am I concerned that Roku went up to $475? Now it's back down to $350 some odd dollars. No, I am not concerned. You know why I'm not concerned? Because I know it's a great company. It will come back up again. So essentially, guys, listen, I'm in it for the long term. I hope you are in it for the long term, because let me tell you something. It is awesome when you know you don't have to worry about the stocks that you're invested in. You don't have to lose sleep over the stocks that you're invested in, because you bought great companies, and those great companies will always pay you off. Okay, just be patient with the market. It's always going to do its thing, whether you like it or not. It has no emotions. You cannot tell it what to do. It does what it wants to do. So guys, bottom line, just be patient with the market. It works. Yes, it works. Take it from me. It works. By the way, it doesn't hurt every once in a while to just go ahead and take a little bit of profit. I mean, a little bit. Not that much. Just a little bit, okay? Depending on what you need. Why are you investing? To make more money. What do you need the money for? Maybe to purchase a home. Maybe to pay for college tuition. It just depends, guys. If you feel like, this stock has gone up significantly, go ahead. Take a little profit, guys. Take a little profit off the table, and then let your profit, okay, your gains, let them run. Let them do the work for you. Let them ride the market. Guys, you're putting your money to work, so let your money work for you. That's what investing is. Your money is working for you. You don't have to work for that money. You are putting your money to work. That's what this is about. You are making your money work for you. So guys, let that money work for you by buying great companies, and just leave the money in there. Leave those stocks sitting in your portfolio and let them ride the market for the long term. And when I say long term, I'm talking about at least 5 years. Let's put it at least 3 to 5 years, okay? 5 would be better, but at least 3 years, okay? So if you do that, guys, you will be okay. You just watch your portfolio grow. If you cannot figure out individual stocks to invest in the S&P 500. That's all the advice I have for now, guys. I mean, I love questions, so you're welcome to go ahead and ask your questions, obviously. But guys, listen, the market is the market. It's going to do whatever the heck it wants to. You cannot tell it what to do. You can wish for it, but that doesn't mean that it's going to do it for you. So, on that note, I'm going to leave it right here. Until next time, everybody. Bye.